Sometimes it means investing in categories that actually are totally out of favor and get no attention now because everyone is so AI obsessed that there is value in being willing to do things that others are not because the lemmings move together. Sometimes we look like the lemmings, sometimes we look like the rebel. But the idea remains, be unafraid of having a very diverse portfolio. But also, if we have a conversation with a founder and AI is not a major part of the conversation, something is probably off.
In today's world, how does a brand break through the noise and become iconic? Join me, Jason Harris, as I speak with the world's leading marketing experts about how they use soul and science to build an iconic brand. Think of it as EQ meeting IQ. So let's lock in and together fast forward our marketing minds on the Soul and Science podcast. Welcome to another edition of the Soul and Science podcast. Today's episode is all about the past, present, future of media, tech, and investing. And I am here with Ben. Ben, what is up? Say hi.
Hi, thanks for having me, dude.
Of course, man. I've known Ben for, years, different incarnations, kind of around the New York metropolitan area. I'd love to start, if you can give our listeners with, what is your origin story? Obviously, I know you from starting way back in the Thrillist days. Yeah. But I don't know, how did you start into media? Tell me how it all happened for you and how you got your start.
First of all, I remember when I was building Thrillist and I was out selling ads and trying to get in front of brands. I was like, how do I get to this guy, Jason Harris, who's running Mechanism? This guy is going to unlock the world for me, hunting my way to you. And it's fun, probably 20 years later to be friends after.
We're still here.
Here we are. Well, I'll do a quick and dirty background. So I grew up in New York and I went to school in Philly and came back to New York now, I guess 21 years ago. And when I got back to New York, I started a company. I started Thrillist, which was, sort of like a nights and weekends hobby, like a newsletter for guys to figure out what to do in New York. Through that, I sort of found myself in the midst of this very, very small, early budding New York tech scene where there was so few people building anything that even smelled like potentially it was a tech company. And because I was building digital media, even though it was really not particularly tech first, I got to know the folks who were building in New York. And while I was sort of coming up and learning from those folks, realized that a bunch of them were doing really cool stuff and that I sort of had deal flow. I didn't know what deal flow was, but I had access to these people who were trying to raise money to sort of get their businesses off the ground and started making tiny little haphazard investments. And on the back of that, raised a little bit of money in a real fund. I started with my dad, who it was sort of like he had access to capital and I had access to some founders, and timing was lucky and New York became a place that people wanted to build tech companies, at first mostly in the consumer space and eventually in every market. And so really I've spent my whole career both investing in founders at the earliest stages and have been the beneficiary of just being a part of an ecosystem that's grown enormously. And then also along the way got to build my media company, and so sat on the other side of the table raising money and sort of learned what it was like to experience the venture market as a founder. And, through the trials and tribulations of digital media being this enormous growth market in this super hot category and raising tons and tons of cash from VCs and strategics to it falling very much out of favor. And I'd say sort of, having good lucky timing in terms of selling the business sort of at the height of the post-COVID ad market. And now I'm full-time investing, but did almost 15 years in an operating seat as well.
That was acquired in
21, end of 21. I think we closed early 22. I actually know we closed early 22 because we closed the same week that Russia invaded Ukraine.
Okay.
And the venture market and much of the economy started to get shaky real fast.
So it was very good timing.
It was very good timing. I missed my window 11 times over the previous decade. So
Group 9 was acquired by Vox.
Yep, which I remain on the board of.
Which you're still working on the board of.
Absolutely. And I think Vox is as you think about the sort of what happened to the darlings of digital media, Vox really is like, I don't want to say the last man standing, but
One of the last men standing for sure.
yeah, but I mean, and I would say standing tall. I mean, Vox, I continue to be incredibly impressed with Jim and the team there and the quality of those brands and the diversification of revenue. But, in a space that has, it sort of can't catch a break.
Digital media was so hot, it was so popular, and it seemed to almost fall out of favor really quick, almost crash and burn. Obviously, there's still like, I know Vox does a lot of, they got podcasts, they have a lot going on.
Yeah, a lot going on, really, truly a lot going on. Like an unbelievable number of uh, places where they, engage audiences and make money. Like it really is a beautifully diversified business.
What happened when that proliferation of digital media outlets grew so fast, and then so many of them went under?
Look, there's a pretty short answer to this, which is what happened with social media. Uh, the promise was you have all these audiences that are reading traditional newspapers and traditional magazines and watching traditional TV, and they're going to move online. And with large audience, with lots of eyeballs, there's going to be opportunities to sell them stuff, and there's going to be a huge ad business that moves online. And all of that was true. But what ended up happening is the winners weren't the publishers, it was the pipes. Like the pipes always win, and Facebook and TikTok and Google and all the pipes that interconnected all these different audiences are where the money ended up going. And media, in a search for more eyeballs, and I was like one of the poster children of the decision to try and productively partner with the Facebooks and the Twitters of the world. And by the way, I think that they have lots of wonderful people at those companies that like care about media and care about content and really did want to see publishers thrive. Ultimately, what happened was those platforms took a lot of the money. Those platforms disintermediated media brands from their audiences, and then they also created an environment where individual creators could go and like fight on the same level as brands that had all this infrastructure and so by the way, like that's not Facebook's fault or any of those platforms' fault, like nor is it creators' fault. Like creators figured out how to create content that consumers loved and that engaged them and that built trust with them and built relationships. But a combination of social and the creator economy was made it very difficult for, I think, like individual publications to thrive in the market.
So rolling back the clock a little bit, first of all, how did you think of the name Thrillist? It's such a fucking good name.
I appreciate you saying that. It was a really pathetic story where we wrote down a lot of beginnings of words and suffixes and put them in a pile and moved them around and then saw if the URL was available. And we avoided the name Ape Alert by a centimeter.
Thank God.
I mean, it was a dark time. Yeah, that was it. I have no great backstory. It was literally a thrill list. I was 21 and even stupider than
I know, but it's a good name. And then how did you think of making it kind of hyper local? Because that's interesting when you think about a digital media offering, but then making it hyper local.
We copied Daily Candy. Daily Candy had built a really great roadmap for us. They started in New York. They built this community of women that obsessed about the recommendations, did everything they suggested. A year or two later, they launched LA. They did the same thing. They created a playbook for how to launch new local markets. When we started, we were deeply inspired by what they had built, so much so that we actually went to their investors and said, we want to build the same thing for guys. And their investors took frankly, like made an angel investment in us the same way that, I've sort of tried to make a career of making early investments in other young talent. And they made a bet on us, and we had the benefit, not only by the way of having the same investors, but honestly, Danny Levy and Pete Scheinbaum, who built Daily Candy, and Pavia and like the early team there were really generous in sort of mentoring us and advising us, which was incredibly instrumental in us, being able to follow their playbook and not stumble too hard. And by the way, they were so early that they created the market for sort of the Fortune 500 to think about email marketing. Email marketing wasn't really a big thing, or it was like we were like buying lists, but the idea of like sponsoring dedicated emails was really a Daily Candy innovation. And we took something that they did well, and we just, we sort of turbocharged it with venture capital and moved a little faster than they did.
And tell me about Group Nine Media and how that came about as like the kind of holding company.
Group Nine was actually called in my brain, and actually my father's brain, because he was somebody who had was not working in digital media, but had been the co-founder of the Huffington Post and was a student of media and was around the early cable business and saw the consolidation of the cable business and how much value that created with when you had like individual channels join forces with others and create the big media holding companies. And so he sort of encouraged me, and I remember a conversation I had with him where he said to me, I was around at the consolidation moment of cable, and I didn't have a position where I was able to take a leadership role in it, but it was so obvious that it was going to happen. And you're sitting in a position owning a leading digital media brand with a lot of investor appetite and interest and like a real understanding of the space. You could play a more important role in the consolidation of digital media than I was able to play in the consolidation of the cable business 30 years earlier. And that sort of stuck with me. And so in the back of my head was playing with this idea of what would digital media consolidation look like. And it was really a conversation or a series of conversations that I had with Discovery. And one of the things I did do a pretty good job of was I knew the traditional strategics in the space. And BuzzFeed had NBC as their sort of like strategic partner, and Vice had the Murdochs, and like a lot of the big traditional media companies had their sort of like digital roll up bet. And I, went to David Zaslav and Bruce Campbell and the Discovery team, and basically over time, you know, got them to believe what I believed, which was that digital media was going to have consolidation and that they should have a bet in the space. And so they made a significant investment into the creation of Group Nine. Um, and while we're doing silly names, Group Nine, one of the reasons for not the Group Nine was how many letters are in Discovery.
That's kind of cool. I never knew that. Yeah.
Wanted to sort of like pay respect for helping put us in business, and they did, and they were really great partners. And by the way, they went on their own consolidation tear. And when we did the deal with Discovery, they didn't yet own Scripps, and they didn't yet own Warner Brothers. I mean, and think about all the assets that David accumulated following in investing in us. But sorry, long story short, but we decided we wanted to go own some other companies, and so we bought some assets and we launched some assets and we created a holding company. And again, I had specifically Vox and BuzzFeed and Vice as the three sort of horsemen of scaled digital media. And I knew those folks well, and I was able to look at what they did well and where I thought that there were opportunities to sort of do things differently, or categories I could go into that they weren't strong in. And when I put my rosy colored glasses on the Group 9 experience, we went from Thrillist as an independent business doing maybe at the time of the merger $30 million of rev, to doing a few $100 million of profitable revenue, and like building like a truly scaled thing that was working when we did the merger with Vox. That being said, in retrospect, I think some of the strength of our business was buoyed by the fact that you had this like ZERP era environment and a lot of advertising getting spent, and it was a good time for us, but it was a good time for our peers, and I think that that's what led to a bunch of consolidation that happened. BuzzFeed bought a bunch of stuff, Fox bought stuff, Penske bought a bunch of stuff, a bunch of people rolled stuff up, and I think it on the back end, it's proven for most folks, for everybody, hard. I think there are people who have done it more gracefully than others, and I would say that on the margin, I think that Vox has done a really good job.
Well, Vox has done a good job, but when you think about Vice, you think about what's left standing. BuzzFeed, there's not a lot left standing.
There's not a lot. I think but the stuff that is the opportunity, sort of the liability is the opportunity, which is AI.
Right.
Right.
So how do you think of AI as an opportunity?
If you have real IP and a scaled ad business and a multi-channel revenue strategy, and you really figure out the right flavor of embracing AI, it can bring significant efficiency to your business. It can create new consumer opportunities, and it's very hard to shift the culture and sort of turn these big battleships. But it is a moment that I think can create a lot of hope if you get over the idea that it could also destroy you.
Do you look at it as revenue stays the same, but it drives costs down? Or do you look at it as a way to drive additional revenue in some way?
It's a really good question, and I don't think there's a simple answer. I think it probably, in the short term, revenue goes down and costs better go down. And I think in the longer term, you have to figure out how this is not a cost savings exercise, but a revenue creation exercise. Otherwise, it's a race to the bottom. And we've seen what happens. By the way, the cable business or the print magazine business or the newspaper business are the examples of what happens when you make your business model about cost cutting for a decade. They all go to shit. You cannot build a business for the long term where the strategy is just to figure out where you're going to cut. You have to figure out where you're going to invest. And I do think the opportunities for where brands can invest in AI, it is not overwhelmingly obvious today.
But there's something there. You just have to turn it around and figure it out.
You can create new, I'll give an example right now, which is not, I'll sort of sound weird and like a little bit secretive, but like we've recently invested in a business in the travel space.
Okay.
An AI company, a consumer business in the travel space. And when I think about what this company is doing, and I think about the assets that Thrillist has had in terms of brand recognition, advertiser relationships, scaled audience, Thrillist could be going and doing what this company is doing, and could be reinventing itself and imagining itself as a startup with a really unfair advantage and leg up. And maybe Thrillist is a good example, and maybe it's not. Maybe there's 100 other brands that you would use as a better example that are stronger today or that whatever. But the point would be, there are new companies with a new generation of founders that are being backed to start de novo consumer businesses in AI application layer companies that, if that kind of innovative thinking lived in companies that have large assets and unfair advantages, you could build some really, really fascinating stuff.
I love that.
But by the way, it takes capital, it takes courage, and it takes a certain kind of talent that sometimes is fiercely independent and wants to go build for themselves and doesn't want to go be a part of a business. I believe that the talent's there and it's possible, but it's not, the founding team that I backed in the travel space, I don't think is employable at
some other place,
at some other company right now. So that's the challenge, but the opportunity is there.
Are you looking mainly at AI companies at this point? Is that where a lot of your investment spending is going?
Our sort of philosophy is we're like highly team and founder focus. Like what we are in the business of doing is trying to be around the most interesting pools of talent and building relationships with folks that we think are going to be great founders. And we sort of believe that like founders are smarter than us and we'll find the most interesting opportunities. And if we're around great talent, we're going to find ourselves in interesting markets. And so 15 years ago in New York, a lot happening in D2C commerce, a lot happening in sort of digital media and ad tech. And so our portfolio looks a lot like that because that was where the best talent was building. As time has gone on and as Facebook and Google built big offices and real engineering talent came to New York and the healthcare sort of startup ecosystem exploded and the crypto ecosystem exploded and the fintech ecosystem exploded and you name it, our portfolio has sort of bobbed and weaved and moved as founder talent has been interested and excited by new challenges, new categories. Over the last few years, so much of the energy that the best founders have is directed towards AI for obvious reasons. And so everything that we are touching, and I don't want to say the overwhelming majority of things that we are touching are greatly inspired by and influenced by AI. Sometimes that means that they are real AI companies. Sometimes that means that they are companies that are being created because of problems or changes that will come to the world because of AI. Sometimes that means that they are companies that are going to not build AI, but are going to use AI to do things far less expensively or replace human labor or sort of service as software. And sometimes it means investing in categories that actually are totally out of favor and get no attention now because everyone is so AI obsessed that there is value in being willing to do things that others are not because the lemmings move together. And so sometimes we look like the lemmings, sometimes we look like the rebel, but the idea remains find amazing talent, be unafraid of having a very diverse portfolio, but also back to your original point, yes, most of what we do, if we have a conversation with a founder and AI is not a major part of the conversation, something is probably off.
When you think of all the things that you guys have invested in, it's typically early stage, right?
It's exclusively early stage.
So it's always early stage. And then how long, I don't know, at what point are you like, this has worked, this hasn't worked, we're hanging on to this thing? Like, how do you make those calls? Because you're looking at the entire portfolio all the time, but you can't just add stuff to it. You got to call also. How do you do that?
It's really, really hard. We're interestingly at sort of a point of maturity now where we have enough companies that are mature and the speed at which we make new investments that we almost have a steady state number of companies that are sort of active because in any given year, let's call it 20 companies will sell or Frankenstein or fail.
Yeah. So a lot of it's natural attrition that
A lot of it is natural.
you don't have to push. You just let it go. Yeah.
The one caveat to that, which is a big caveat, is venture has I think, a pretty obvious liquidity problem right now. And, I'm very optimistic about the current things I'm seeing around the IPO market and around actually some things in M&A. And I do think that we may enter a period, who knows how long, where there will be some old-fashioned liquidity, some companies IPOing or selling, but venture as a category needs to figure out an off-ramp for LP dollars in good companies through secondary sales and other types of mechanisms. Continuation funds. There's 100 different mechanisms that people are sort of playing with, and I do think that we are spending more time today thinking about ways that we are able to create liquidity along the way in partnership with founders, but where we're not putting money in day one, day two, day three, day four, and then saying, hey, call us when there's some wonderful magical event and somebody drops off a bag of money at your house.
Right.
Which we know, you built a business. It's never a straight line. There's good times, there's bad times. And the reality is that like very rarely does someone even really great companies don't just have fairy tale existences. And so we need to we need to make sure that we're there to sort of like weather some of those storms with our founders.
What do you think you're particularly good at? I know you're surrounded by a ton of talent, but what are you particularly good at that maybe other people are not as good at?
I've always been pretty mediocre at a lot of things, dude. That's sort of like that generalist investor for you. I'm like
Come on.
I am good at getting people to want to come along on a journey.
Yeah.
And that means that manifests itself in being able to get founders to want to work with us. That's about how to keep, a team of really high performing, ambitious, great people wanting to work here and build this thing with me. I think that, works in terms of getting LPs to want to invest in us and trust us with their money. And so like that's always what I've been pretty good at is, and then I would say that there's like, I hope that I'm good at the intangible gut thing around reading people and making decisions on people. And that plays out in the people that we hire here. It plays out in the founders that we, pick to back. And so that's like a little taste thing that like, you know, time will tell, but like, I hope that that's something that I'm good at.
Do you have a mantra or a quote that you always come back to or that you live by or that kind of pushes you?
Well, I have a few. One of them is life is what happens to you while you're busy making other plans.
So true.
And that's the like, the dad in me and the, 43-year-old in me in terms of just like really be present and enjoy it.
Which is interesting though on that one, just to, gone from entrepreneur to investor and your fund, a lot of it is playing the long game. You hope this stuff pays off in the future and it builds and you're helping these entrepreneurs, et cetera, which is very opposite of staying grounded and focused on the present.
So that's the hardest thing about this job for me is that I need to be patient.
Yeah.
The way that I counteract that and the way that we counteract that is you're only as good as your next deal. And so, I mean, we had our partner meeting yesterday and had a conversation about what is staying sharp in this market. How do we make sure that the bar only continues to go up in terms of founder quality? How do we not get sucked into FOMO in this overheated, crazy market? How do we like stick to our first principles and hold ourselves accountable and ask each other the hard questions and challenge one another here in terms of how do we do excellent work every day? And I don't, again, I've never worked in another venture fund, so who am I to say that like that's not the culture at every venture fund? But I do think that some of the memes about VCs, about like lazy VCs taking lots of credit for other people's work and taking August and December and whatever other months of the year off, like there is a little something to it's a slow burn business and you can do well in this business and not be an animal. And I don't want to leave that to chance. And I want to be an animal and I want to build a team of animals. And I think that we're doing that. And so like, that's again, that comes from operating and is something that is present in our culture here.
And values comes from values.
Absolutely. Absolutely. And by the way, my other mantra, and this is my dad's mantra, and he said this to me a lot when I was growing up, when I would have imposter syndrome, which is just remember everyone's a fraud.
I love that. And it's so true.
And so, and I say that to myself. I say that to folks on my team when someone feels out over their skis or they feel in sort of unsure about themselves and their decision making. It's like, listen, no one has the answer. Don't forget that.
When you feel like there's chaos and you're not sure what to do, are you going to make that investment? Are you going to cut it off? Are you going to make that higher? Is there a way you solve a problem or a technique that you do or a place you go or a method you have?
I think I try to figure out how to connect to my gut. And that's going to take different formats. It may be I'll put a reminder in my calendar that I have to make a decision on something. And that if I need the reminder to make to make the decision, then it's a no.
Yeah.
The proverbial, like, if it's not a hell yes, it's a no. But like, just figuring, I really do think that like the end of the day, I want to trust my gut, and figuring out how I don't let noise or, other people's opinions or any externality force me into a decision is that's the goal.
That's a good way to think about it. What are you most excited about and conversely most anxious about for the future of your business?
I'm most excited about the quality of our team here.
Yep.
And to sort of like a secondary degree, the quality of our portfolio and the founders that we back, and really the quality of the founders that we back and that we're getting access to. And so
the people
is what makes me excited. The thing that keeps me up at night is all the things I don't have any control over, starting with like the macro of
tariffs.
I don't have the stomach to talk about politics right now, but like starting with the things that like we really have no control over, and up there all the way down to changes in technology and how fast things are moving, and anyone who's got all the answers to how AI is going to change the world, like anyone who's sure they have all the answers should be immediately discounted and ignored, because nobody has them. And so I'm, I generally speaking, like I'm a control freak, and as I get older, trying to like get comfortable being uncomfortable is something I work hard at. That's always going to be what keeps me up at night, is the unknown.
What do you do to stay healthy and sharp and not get overloaded?
I mean, first and foremost, like spend time with my kids and fam, like really prioritize like relationships that like give me energy, and like family and friends, and making time for that. I would say trying my best to disconnect from technology. Like I don't sleep with my phone in my room anymore. I have a weekend phone.
No way. Tell me about that.
I have a weekend phone that has text message and like basic services.
You have like a dumb phone on the weekend?
Yeah, but a dumb phone where I can be more present for my kids. And look, sometimes it doesn't work. Sometimes I'm not able to do it. I'm always reachable, but I'm not just refreshing, scrolling, whatever all the habits are. And I don't want my kids to see me being like that. And I know, again, I fail at that plenty. And then, like the basic stuff, like try to get some sleep, try to, I stay active, I work out, and, but I'm not like deeply biohacking or like trying to like, rewrite my DNA, like staying active, high value relationships, and just like whatever your version of trying to decrease extreme stress is probably the best ticket you got.
Well, Ben, awesome conversation. One thing I've always loved about you is you're successful and grounded, and it's so refreshing. Even just your mantra, everyone's a fraud, I fucking love. So,
well, again, don't credit that's my dad. He deserves full credit.
But you're a real one, so we appreciate you being on the podcast.
I'm so happy to be here. It's great seeing you, and we gotta hang in the hood.
Break bread. Let's do it. Soul and Science is a Mechanism podcast produced by Maggie Bowles, Ryan Tillotson, and Lily Jablonski. The show is edited by Daniel Ferreira with theme music by Kyle Merritt. And I'm your host, Jason Harris.